Did you know that your credit score could be the deciding factor in securing a dream home, landing the best interest rates, or even getting approved for an apartment? Across the US, the average Vantage score sits at 702. But if yours isn't quite there yet, don't worry. Today I'm going to show you exactly how to boost your credit score strategically, and it all starts with one crucial factor: having a career that pays you enough that you aren't living above your means. So, if you want to know more, stick around. I'm Stacy with AdjusterlYfe, a channel dedicated to taking you from getting started to, most importantly, getting paid in the field of insurance adjusting and offering career inspiration to help you make that change you've been contemplating for so long. So, if you like what you hear, please consider liking and subscribing. Now let's get started. Making a career change and improving your credit score may seem like two totally separate goals, but they're more interconnected than you think. Now, in the past, there were times when I either wanted to buy a new car, rent a really nice apartment, or take out a loan, but I was told that the interest rate would be outrageous, or that I needed a cosigner, or I was simply told a flat out no because my credit score was horrible. And it was absolutely horrible because my paycheck was usually spent before I even got paid on things I couldn't even account for. And I was barely keeping my head above water, not paying bills on time, and not budgeting at all. But 7 years ago, I was led to the career I'm in right now and eventually took specific actions I'm about to share with you that helped increase my credit score above 700. Now, before I get into those specific actions, I do want to clear up a common misconception. Your income isn't directly included in your credit score calculation. However, your earning power has an enormous impact on your ability to manage credit wisely. A solid, well-paying job makes it easier to pay bills on time, reduce outstanding debt, and avoid financial pitfalls that drag down your score. Now, I experienced this firsthand when I changed careers at 46. Not only did I step into a role I truly enjoy, but my increased salary allowed me to eliminate debt and rebuild my credit from the ground up. Here's where it gets interesting. A higher salary gives you the financial leverage to keep credit utilization low, which is a major factor in your credit score. It also means you can pay down debt faster, avoid late payments, and qualify for premium credit opportunities that further improve your financial health. Lenders view financial stability as a sign of responsibility, and with a strong income, you're positioned as a lower risk borrower. The result? Better credit limits, lower interest rates, and a path to long-term financial success. So, if you're looking to boost your credit score, start by investing in your career and increasing your earning potential. The benefits go far beyond just your paycheck. They shape your entire financial future. Now stay tuned, because up next I'll break down the exact steps to optimize your credit score for maximum impact. And if you're tired of drowning in debt and struggling with a low-paying, unfulfilling job, it's time for a change. And consider independent adjusting, because it is a career that can open the door to a six-figure income with no prior experience, no college degree, and minimal startup costs. And it's the very path that helped me break free from debt, rebuild my credit, and take control of my financial future. Now, let's get into some quick and effective tips that help me successfully rebuild my credit. First, check your credit report. You can get a free credit report from sites like annualcreditreport.com, and you want to look for errors like incorrect account balances, late payments that shouldn't be there, or even accounts that don't belong to you. If you find any mistakes, dispute them right away with the credit bureaus, because fixing those errors alone can give your credit score a quick boost. Next, your payment history makes up 35% of your credit score. Even one late payment can hurt, so set up automatic payments or reminders so you never miss a due date. Now for me personally, I don't like automatic payments because I like to be in control of the money going out of my account. But If you're not organized and can't keep up when payments are due, setting up automatic payments will be a great help. And if you've fallen behind, try to get current as soon as possible. Your score will start improving once you show consistent, on-time payments. Credit utilization is another big factor. It makes up 30% of your score. And what this means is keeping your credit card balances low compared to your limit. Now, ideally, you want to use less than 30% of your total available credit. So, for example, if your credit limit is $1,000, keep your balance under $300. And if you need a quick fix, ask for a credit limit increase. Just don't rack up more debt. Okay. Another big factor is the length of your credit history. If you have old credit cards with no annual fee, keep them open. Closing an account reduces your available credit and can shorten your credit history, which could lower your score. So keep those old accounts active with small purchases now and then. Every time you apply for a new credit card or loan, a lender does a hard inquiry on your credit, which lowers your score slightly, but too many inquiries in a short time can make you look risky. Instead, space out your applications and only apply when necessary. And if you're just starting out or rebuilding credit, you want to consider tools like secured credit cards, credit builder loans, or becoming an authorized user on someone else's account. These can help you establish a strong credit history with responsible use. Once again, what you're going to want to do is set up payment reminders, keep your credit card balances low, pay off debt strategically, monitor your credit regularly, and work toward increasing your income for better financial flexibility. Following these steps is going to help set you on a path to a higher credit score and better financial opportunities. And if you want more detailed information on how to become an independent adjuster, visit my website at www.AdjusterlYfe.com, and that's life with a Y, and get my easy to follow resource guide. You can also get a free adjuster career checklist. Check the description below for a discount code if you're ready to start your pre-licensing training or exam prep, or in need of continuing education if you are already a licensed adjuster. Like, subscribe, and comment if you found this information helpful. Finally, embrace the lessons, celebrate your victories, and persevere through difficulties. Thank you so much for watching, and I'll see you next time. Bye.